Did you know that Munich, Bavaria has emerged as one of the most dynamic biotech ecosystems in Europe over the past 2 decades? But what's the secret behind this success?
We were a lucky part of that because when we started 4SC at that time, it was really due to the Bavarian government support for funding. And 4SC was built. There was there were very good terms and conditions on the market to finance a new startup in Bavaria, and we decided to relocate. We started in Würzburg in the middle of Germany, and then moved over to Martin Street because there was a hotspot and still is the hotspot of biotech. And if you then look back, basically this is really all due to the decision at that time of the government to sell their stock of Fiat Intercom and to use the money for investing it in life science. And we as Immunic are still earning the fruits of that time of pretty smart political decisions, which are maybe not, they were not mainstream. I think this was really something where Vienna was just a little bit later, and therefore it's always the same. If you're early and you have a big vision, you can succeed easily.
Today, I'm privileged to have Dr. Daniel Vitt, the CEO of Immunic Therapeutics, join the conversation. With a rich history that includes co-founding 4SC and leading Immunic through its transformative stages, Dr. Vitt offers unparalleled insights into the biotech world. Dive deep into the journey of Immunic, its groundbreaking developments, and the challenges and opportunities of the biotech landscape. Here is what to expect in this clip: Munic's rise as a biotech hub and its influence on Immunic, the pivotal role of political decisions in biotech growth, Immunic's innovative approach to treating multiple sclerosis and gastrointestinal diseases. This episode promises a wealth of knowledge. Remember to subscribe, comment, and share. Your support helps deliver more invaluable content like this. Now, let's dive into this enlightening conversation with Dr. Daniel Vitt. And now I'm curious, you mentioned that Immunic, you founded the company in Munich, in Bavaria, in Germany, which is, I think, one of the biggest and best ecosystems in biotech and life science we have in Europe. It's impressive what comes out of this environment, how many companies evolved out of Bavaria and Munich in the last 2 decades. I think every time when I look at the ecosystem, it's growing and growing and growing.
And we were a lucky part of that because when we started 4SC at that time, it was really due to the Bavarian government support for funding. And 4SC was built. There was there were very good terms and conditions on the market to finance a new startup in Bavaria, and we decided to relocate. We started in Würzburg in the middle of Germany, and then moved over to Martin Street because there was a hotspot and still is the hotspot of biotech. And if you then look back, basically this is really all due to the decision at that time of the government to sell their stock of Fiat Intercom and to use the money for investing it in life science. And we as Immunic are still earning the fruits of that time of pretty smart political decisions, which are maybe not, they were not mainstream. I think this was really something where the politicians at that time had more visions than maybe today. It was a long-lasting effort, where I personally benefited from.
When was the decision?
It was 1997 when we started, and was all based on the first startup phase in Martin Street in 1995, 96. Where that high-tech initiative started.
Now, I think in Vienna, it was almost empty back in the 90s. And
yeah, Vienna was just a little bit later, and then for you, it's always the same. If you're early and you have a big vision, you can succeed easily.
That's true. That's true. And I have a collaboration with the Austrian stock market, and I frequently get the question, why are biotechs not interested getting listed in Europe? So what's the reason?
I have a very clear answer to that, because the legal environment is preventing biotechs from raising enough money in Europe. It's European law. And I went to that. Look, 4SC is a public company on Frankfurt Stock Exchange. And I think the company would have been may have been a multi-billion company at the end if we would have listed the company in Nasdaq. The problem is really that if you need money for growth and you want to fuel the development of the next product, you need to have enough money. You need to be able to raise more than 10, 20% of your market cap. This is the problem. And then in Germany or in everywhere in Europe, you need to write a prospectus. And it may take 3 months. If you have an investor who wants to put in 20 million next morning, you need to take the money. You need to be legally able to take the money. And in the US environment, it's different. You can do that. You have access to the market. It all depends on how good you are, and do people believe that it's a good investment at that time point, and you're free to negotiate. You can have stock already prepared to given out based on the perspective. I don't see any disadvantage for investors on the US system here. It's really a disadvantage to companies because it's really blocking capital raise.
Yeah, I think the investors in the US market need to qualify first before they're allowed to enter the bigger numbers game. And in Europe, if I get it right from what you said, it's the other way around, that companies are forced to do this basically checks.
Yeah, and it's so simple. It would, maybe everybody can do that exercise. Just look on which company raised what amount of money and in what context. And I went through both experiences, and I'm pretty glad that I'm listed at Nasdaq. Honestly, it's a tough world. I think it's not an easy thing, but it gives the company access to what the company needs.
So you went public on the European market and on the Nasdaq.
Yes.
With Immunic or with your first company?
No, on Munich in Frankfurt with the first company with 4SC. There was in 2005. It was the only life science IPO in 2005.
Congratulations.
And a tough time in the market environment, but I think only the tough ones survive. And then with Immunic, we took a different route, because as a European company, the normal IPO track is a little more challenging. So we did a so-called reverse merger. So we did a bid or an offer for a company which was looking for a new future after a phase 3 failure that was based in San Diego and called Vital Therapies. And there was a competitive process. So they received something like 70 offers of companies supposed to be acquired formally. And after a quite competitive process, we succeeded in getting that through. So they accepted our offer of a takeover, and then they acquired Immunic Germany. We took over 80% of the ownership, renamed the company, US company, into Immunic Inc. And since then, legally, we are a US company, and we took over the Nasdaq listing of the company.
Okay.
And then also there was
smart.
That's smart, but it's also hard, because at that time point we needed to have commitments of our current shareholders of putting in more money, because you can't go to Nasdaq with empty pockets. You will be 2 weeks. So,
how is the availability of capital in the US for biotech companies? It's such a huge difference to Europe.
Yeah, it is. It can't be bigger, honestly. I think it's like 100 to 1.
Okay.
So I really think that, and if you look around, most successful companies in Europe are really listed in Nasdaq or something.
Yeah, almost all. I think Biotech is listed in the Nasdaq. I think 2019 or something. The only listing that I'm aware of was Intercell in, I think, also 2005, but then was acquired by a French company. Then we have Biotech, I think, listed also on the Nasdaq recently.
they both have dual listing, I think.
Yeah.
Yeah, and even Morphosis was German listed. Now after the merger is also at Nasdaq. So it's more or less unavoidable to do that. And as I said, this is on the one hand being exposed to investors there, and because this is the right target audience as well, but also just the legal environment. And this is what people usually oversee in judging. This is not just talking about attractiveness of trading platforms or so. It's the legal environment, which is the problem.
I heard very often that US investors like to invest in companies that have a US story. And since you have a profound experience in getting a company listed in Europe and the United States, I would like to verify this. How about the storytelling on the US market? How challenging is it as a European company to convince investors to put their money in your company and not in some other options that they have on their own market?
I think today it's a global world. I don't see any difference between being European or US. It's more your story, your knowledge, your reputation. Yeah, I think, of course, if you're new to the market, you don't know everybody. You don't know anybody there, so you need to knock on every door. Of course, it's a tough time, but at the end, you need to build credibility, and I think Americans don't care about where people come from. It's really more about the content and maybe the way you build your relationship. I think we have an advantage of being in German, or it would also be true for Austrian or Swiss or whatever, in that usually we don't have the tendency to oversell too much, which helps us a little bit on credibility.
The likelihood of getting a Theranos story out of Europe is pretty small.
That's maybe true. Yeah, but on the other hand, I think we are treated fair. And if we do something negative, it has the same effect as if American companies do something negative. If we are successful, at the end we will be. At the end, the market works, and we will get what we deserve. And therefore, even if our market cap is not where it should be, from my point of view right now.
But this is basically good for investors. I mean, there's opportunity then there.
I don't care about the current market cap if I don't raise money on that level. And at the end, it's a binary thing. Biotechs, if they succeed, it's a big win for everybody involved. And that's what we're working for, I think, at the end.
I mean, you have the same story, I think, for the uptake, like NVIDIA showed a couple of weeks ago. So they will basically play a key role in artificial intelligence, and then you have this uptake. So it's not a long linear curve. Usually on the stock market, you have this, when you have a push through, when you present your data and it works in phase 3 and it works in phase 2, you probably have then this development of your stock price.
Exactly, and that's what we're working for. And at the end, of course, most of the successful biotech companies at the end are acquired by one of the bigger companies. Not everybody, but a lot of those. Today, I just heard that Dice Therapeutic, which is one of our peers in the inflammation space, was acquired. Really, so this is a dynamic world, and there you, at the end, you want to get the fair price for what you have. It should be multiple of what it's currently the market cap.
That's true. What I'm interested in, that was an enlightening conversation with Dr. Daniel Vitt. Today, I explored Munich's rise as a biotech powerhouse, the political decisions that have influenced the industry, and Immunic's pioneering approach in medicine. I genuinely appreciate you taking the time to listen. If you found value in this clip, I'd be grateful if you could help spread the word. If you're tuning in on platforms like Spotify or Apple, please consider leaving a 5-star review. Your feedback not only boosts the podcast's visibility, but also helps others discover these insights. Sharing this episode, commenting, or even just giving it a like can make a significant difference. It's through your support that I can continue to spotlight industry leaders like Dr. Daniel Vitt. I have more insightful episodes lined up for you. So until our next conversation, keep pushing boundaries and stay curious.